Hello traders, this is Kevin Loughlin. I am a harmonic counter-trend trader, and as the name suggests, I use harmonic patterns in my trading. I also use Elliott wave principle, and I inform my trading decisions with elements of classical technical analysis and Japanese candlestick patterns. This evening, in the weekly review, I'd like to look at four pairs, two of which I'm involved in, and two I think are quite interesting in terms of the Fibonacci relationships that they're showing. And the first one we're going to look at is the Canadian dollar against the Japanese yen. As I say, there's some nice Fibonacci relationships taking place on this. This is the 4-hour chart. On a larger scale, we have a large Gartley potentially here because we have from X to A to B, and we have a 61.8 plus. So it's just over 61.8. That Fibonacci was spiked a bit. Then the C retraces down to just shy of the 78.6. So we've got 4 good points of completion for a potential harmonic Gartley pattern. Currently I'm short this, and I've got a conservative target here, so I'm short this. I quite like this little pattern here, this little blue X, A, B, C and D, because it was getting overbought here on the 4-hour, and as well as that, it quite nicely come into the 886 and spiked it. Currently we're getting what's known as a shooting star, and if this candle completes, which will be in about 45 minutes time, it'll be quite a reasonably good bearish sign that this market might come down and hit target here at T1, which is about 592, and it's just above the B point in this little Gartley, this little bear Gartley, which is a very nice 618. Again, just shy of the 78.6, so pretty classical Gartley. Many of these Gartleys complete at the 886 or just above. I think this is close to the 94.1, another important Fibonacci number. And importantly too, it's overbought, so quite conservative. The larger pattern tends to take dominance, so I'm happy to go for a conservative 50 pips or so profit here. With the second half to break even if I hit target 1, and if it rallies and goes back up, I'll look for another opportunity to short up here. So as I say, the harmonics are quite good on this pair, the Canadian dollar against the Japanese yen. Now, the other one I'm involved in at the moment is the New Zealand dollar against the Great British Pound, and if we get that to enlarge, what we see here, we've seen the culmination of an Elliott wave 5 wave pattern, and subsequently, after you've had the completion of an impulse wave in Elliott terms, we get a correction. Now, this could be a big A, and then the next B could be coming up into here, and then the C could be coming up into here for either a running flat, a regular flat, or even a triangle of some description. We don't know. But if we drill down on the smaller pattern, we can see relationships here, and we can identify a little Gartley pattern, or sorry, a little bot pattern with X, A, B, C, and D. A nice classic B retracement at the 50 of XA. We're coming in here between a 618 and a 786 for C, and again we're getting this nice shooting star. So I'm in this market at about 5208, or sorry, 5213. I think I'm in this one at. So my target's going to be a retracement in this instance of so retracement of the CD leg here, 38.2 retracement of that, and that's a 5091, and so 5091. So yeah, I'll be looking hopefully for about 100 pips profit in this one. Yeah, I'd like to see this market drop down from this position. We're getting some encouraging candles, and we had some divergence down here quite nicely, which prompted me to enter this market as well. We've got the divergence on the RSI versus price. It didn't make it past the X point here in terms of price. And again, I think we spiked the 94.1 fib on this one. I just waited to see what this one would do. I got in at a better price. So with these bad patterns, there's quite a nice risk-reward ratio. Obviously, your stop's going to be above X, and sometimes X will get spiked. The 113 is a very, very common area. So sometimes it's good to have your stop above the 113 extension of XA. And it can keep you out of trouble a lot of the time. So the 113 is here. And we have this big leg here. If we moved X up into here, we could consider that an even bigger leg and maybe a bigger pattern. Again, sometimes the larger patterns take precedence and they are more dominant. And this one's come up into 382 in this instance, so still a good fib. Back down to the same retracement here of C. This is 786. Again, another fib. So you could say there's a bit of confluence in terms of structure, fibs, and confluence on our indicator as well. In this instance, it's our RSI. Okay, so there's two markets I'm involved in. Looking for about 100 pips profit plus on this one, and looking for about 50 pips profit on the first target on the Canadian dollar against the Japanese yen. Let's have a little look at the euro against the Polish zloty. This can be considered to be an exotic. And again, what we have here is a potential 886 bull Gartley, where we have our X, A, B is a 618 plus, C is a nice fib here, 618 plus, and the equivalent A, B, C, D terminates very close to the 8862. So again, we could be looking at some confluence. We're certainly getting divergence on this daily, on this 4-hour RSI. So there's definitely divergence taking place. So this could be considered a classic 222 Gartley. Again, back to H.M. Gartley's book, where on page 222 this pattern is described. Gartley himself didn't apply Fibonacci percentage. That didn't happen until much later, till Laurie Pesavento did it. But nonetheless, what we're looking at here is a potential bull Gartley. The problem with some of these is that they can challenge the X. So you're going to need to you really are going to have your stop below the X in this instance, and possibly even down here below the 113. And if, for example, this market does decide to rally off the 886, and it's just moving nicely into it at the moment, you know, if you had a target here, then you might have a 1-to-1. Might get you clear. It might just get you clear of the 113. Let's have a look and see if that does. Yeah, just about. Yeah, so you could be looking at a 1-to-1 risk reward, and that again, because this Gartley's come down in the 886, it's a better risk reward than you know, the sort of 786 with classic reversal. It did try there. You notice that you did get some confluence and some correction take place at the 786, but obviously the market didn't rally very much and has come back down into the 886. So I'm not necessarily going to trade this one. I might, but again, I might not. You're looking at 827, 820, say, pips, and they might be pipettes. So you could go go half a position or whatever, going a low position because you might think it's quite a big stop here, a big risk in this one. Okay, so anyway, the fibs are quite nice in that one. The euro against the Polish zloty, euro PLN. Now finally, got a minute or two to have a look at the Aussie Japanese yen. Quite like this one because we have the potential for a big Gartley taking place here. Not unlike the Canada Jap, which is sort of the sister or cousin of this one, because you've got two commodity currencies against a risk currency, i.e. the Japanese yen. So X, A, B, C, and will D happen up here. This could be a potential reversal zone in here, where we have our dotted line equivalents here, making our equivalent AB equals CD. I am thinking this might actually drop down to here before, so I haven't shorted this. I didn't get into this one. Let's see, because we do have a little pattern in here, I believe. No, well, that's a 786. That's a 786. So the other thing too, this is a potential butterfly, and the termination of PRZ point for the butterfly is about here, and in fact it's coming in close to this termination point is coming in not too far from the 786. It's probably more 707 of this big blue XA, and we've got a 3A2 extension of XA, the red XA here. So a 38.2 comes in close to the 786. I'd like to see this getting a bit more overbought, but what I think it might do actually is it might drop before it decides to come back up. But what this illustrates is the fractal nature of the markets and how we can have patterns within patterns. And we can play these little patterns before the more dominant pattern takes over, pushes up, and then potentially gets short in the right here again. We're looking to put our stop loss above the X, perhaps even above the 113. Anyway, traders, that's 4 Forex pairs I thought were interesting this week. 2 I'm involved in. Hoping to make some profits on 2 of them, and 2 I thought were quite interesting. Anyway, traders, have a good week, and I'll talk to you next week. Take care, and bye for now.